Hello everyone, welcome to the Elliott Wave Forex.com YouTube channel. Today is September the 20th, and the chart of the day for today is the Dow futures here, guys. 60 minutes time frame. So we got this wave to pullback on the September 11, 40,028, and it continues to make new high at the moment, guys. So it continues to be bullish, obviously, right? And you can see that we have ended one here, and with two pullback ended very shallow as an expanded flat EVC, and this low here is the low after the FOMC meeting, right? So this count here is really kind of looking quite aggressive, since typically this wave 2, which is a correction of this wave 1, typically, ideally should be somewhere around 38.2% at least, or even 50% sometimes, and 61.8%. But here, if you look at the retracement, it is really very shallow, right? I mean, it didn't even reach 23.6, which is basically giving us another option that we could be actually still within 5 of 1, right? If you look at the momentum, we do still have a divergence, which is saying that we could still actually be with 5 of 1. Now, why wouldn't we call it with 5 of 1 though? Because if it is with 5 of 1, then basically the pullback will not be this shallow. The pullback will be correcting the cycle again. So it will be, let's say, something like this: 1, 2, 3, right? So you just move one here, you move two here, and then higher, which is possible. By the way, I wouldn't discount this possibility. This is possible, and you should be aware of that. Okay, so that's why we don't put the invalidation level here, which is the post FOMC low, but the invalidation level is here. This is the more important low. But we chose this one because if you look at the other market, the other indices, what looks happening in the other market is it looks like this is truly the end of the correction of this cycle. So if you look at, let's say, let me go to, well, first of all, before we look at other index, let me just zoom out to the daily time frame first to give you some idea. So we're going to focus on the higher degree label, which is the 1 and 2 here, and also the 1 and 2 here. So if I look at the daily, that's our 1 and 2, which is the same as the 1 and 2 here. Okay, so if you just simply look at this, if you just simply do a simple extension analysis, then you know that with 3 ideally should be at least 100%, can sometimes even go to 161.8, depending how strong the rally is, right? And then you know the sequence still remains bullish, since we make new high and we have not reached our minimum sort of target for wave 3. All right, and so I think there's no question what the right side is. The only question is, like all this very short-term sort of structure, whether this is actually 1, 2, and then starting with 3, or whether we are actually still ending 5 of 1 and doing a bigger 2 first. So that's the only thing that we are debating. We are not debating about, oh, this is bearish or this is bullish. So I think that trend on the right side is, is no question what the right side is. So now the reason that it is possible that this is actually the end of the correction, even though it's very shallow, the wave 2, is because if we look at other indices, for example, if we take a look at the DAX, right? I'm not sure if the DAX, yeah, this is the DAX here. Right, so if you take a look at the DAX, so the DAX should be, the symbol should be this one. This one is a better symbol here. So if you take a look at the DAX here, right, the DAX also has already extended higher, as you can see right here, right? And we're going to be focusing especially from here, which is the September 11, right? September 11. Now, if you look at the short term here, right, this low here, September 18, is the FOMC low. This pullback is also very shallow. So the question is, are we still within the same cycle, or we have started the new leg higher? Now you can see the momentum is very strong on the breakout here. There is no divergence unlike the Dow. So what the DAX suggests here is that we are not in a wave 5. Since if it is a wave 5, the momentum should be pretty weak, but we are not. This is making new high here. This is FOMC low, but then the momentum is also equally strong. So that means the DAX is saying this is not wave 5. So then that means, okay, the DAX also ended the correction over here, even though it is extremely shallow, and then starting the wave 3 here, which then basically allows us to say, well, the Dow could be doing the same thing as well. But the Dow itself, like I said, it still has a divergence if you look at the Dow, right? So that means that we might still potentially have a chance to that the extension higher we saw after the FOMC is still part of the same cycle, wave 5 of 1, and if that's the case, then we can get a bigger pullback first to correct the rally from September 11 before higher. But again, because the DAX is suggesting that this is not really wave 5, we are calling the same thing in the Dow. You know, we ended the correction and then starts the next leg higher. Okay, so that's basically the idea here, guys. For the Dow, right? So we're calling 2 completed instead of 5 of 1. So September 11 is the same. Look, I mean, correlation helps a lot, because then you will be able to figure out, if you're not sure, what the more possible count is, right? So in here, DAX suggests we might see further upside. It's not with 5. So Dow, on the other hand, still has divergence, so there is still possible. This is with 1, but we chose this one, which is the more aggressive count, since the right side is bullish anyway. Okay, so that's the update here, guys, for today. As always, if you want to get more updates on the Dow or any other indices, ETF, Forex, commodities, feel free to check our service. We have 14 days trial, and the link is in the description of the video. So see you all again next time. Have a nice day, everyone.